zero. Here we are, my MMTs during an earnings season. We knew that Apple was going to take down the TQQQ bull. We've been short that bull with puts on it. We had the put options on Apple Computer because we did, and we had the 350 puts that we traded. That's this contract right here. Or not the 350 call. That's today's expiration. We had the this expiration. They closed at $13. Wholesale entry was down here. Big pop to 1070 when the Apple went down and the bull went down with it. The bull went down and the 350 put on Apple paid wonderful money. Say wonderful money. The TQQQ is coming up off the lows. That was a short all day long, buying put options on it and shorting the bull outright. Gave you a big trade here, gave you a nice short on Apple on the open. So you got the Apple puts and the Apple short. You got paid 4 ways on one directional movement with these markets. And that's the gift of having the gift. And the gift is that the NASDAQ is down 30 handles. That's a big haircut. And once again, we shouldn't even be down, but we're short. The only long position we have here is our Google Dolls. So basically, we had great action in the Apple movement today, and we had long and we had shorts. When I put the Apple video here, you can see that the trades, today's opening bell was that super monster gap. Last night and after hours, we got short at 154.72, covered, got net long today off of that bottom, took it up, took the short down, reversed that trade, got out of that one put. Then we got long the name and we took it up, and Apple is contributing another reversal right here after its intraday run, which is also, you can see here how that bull, this bull that I have behind here is also related to the very same trend for directional movements using calls, puts, and short. Short to bull, puts on the bull. Here, Apple was going to take it down. Look at the gap. Sold that earnings again. Walked at 369. We got entries on the 350 put right here. MMTs, you were here. We wouldn't break it. It was time to get long. Then it was time to get short. And we're just going through this wacko thing. That's the Apple trade. When you take a look at the bull right next to it, it's trying to do a 3, 6, 9, 12 to another reversal. That means that these things are soft, and it means that the harder, the more overbought the market is during the earnings season, the upside is more limited because of the amount of movement and price action over multi-month rallies that we've had. Is that one has to be careful to understand the imbalance between that bull and that bear. And that when you're mathematically totally out of whack, totally hormonally, the indexes, their hormones are like left field. So never fight the trend. We're market makers. Our platforms that we have and use tell us to short that, and we did that. And Apple would be the one that took it down. And Apple has a nice range. But when Apple goes down, this goes down. And so does the NASDAQ, because 21% of the NASDAQ 100 and NASDAQ is tied to Apple. So that's why the bull trade is good. And that's why the Baidu trade was just like that bull behind here. Is if I get back to your bull chart right here, you're going to see the same move. See how the bull moved down and see how Baidu is behind here? Look at the two moves. Look at that move down all the way. And when that happens, the higher internet stocks short all the way down, double short. So when the TQQ bounces up, we're making a bottom here in the platform. I will populate it. I will update people about bear and bull.